Welcome back to the show, everybody. Check out these headlines this morning. XRP network whales. We got a scoop on the SEC expert in the SEC versus Ripple, Brazil's Federal Reserve, digital bonds, JP Morgan, Circle asking the Federal Reserve to step back. We'll get into that. We also have another analyst who is telling us the system is very far gone. We need a neutral bridge currency. Can you say XRP? Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at Dig Perspectives at the top of the screen, everything we're talking about here today. And also on TikTok at Digital Perspectives, no spaces. Right now, the market is down by 3.3%. We're at $1.266 trillion market cap. We're bleeding off today. Hope that doesn't continue into the weekend, because if it does, me and Mrs. Backup are going to have a talk, because XRP's at 38 cents right now. I'm going to buy the dip. Anyway, and it might not be a lot, but I just have to out of habit. Bitcoin right now, 28,900 plus. We see it's down also. So is Ethereum right now at $1,800. We will keep an eye on all of this as we move forward. What's the range of price right now? 39 cents on the bottom, ladies and gentlemen, and 41 cents on the top. I tell you, it's hard for me not to buy the dip. Not financial advice, just getting excited. This is exciting too. This is linked to at Times Square. Yeah, they are soon going to be interviewed by the folks at NASDAQ. They are continuing their mission to democratize access to the private markets. That's exactly right. If they had it their way, there would be no rules for accreditation. They would let you just come in and buy, but they have to abide by the rules from the SEC and FINRA alike, or they get in trouble. But they're doing everything they can to open up, and they have massive, massive opportunities coming, even if you're not accredited at this time. But if you are, don't forget to check this out, because in honor of Members Week, today's theme is diversification. Linked to is reducing the minimum investment threshold to $5,000 for all digital asset companies. Available at link2.com. Link underneath the video. Listen, if you're not accredited, download the app, register your name, get accredited. You get so much information for free. It's unbelievable. Make sure you check it out. Let's talk about XRP network whales holding between 1 million and 10 million XRP. Listen to what they're doing. Have collectively been accumulating. You know, one of the things I talk about, my adages, slogans, kind of core tenets to investing, is I'm always stacking my pennies next to their dollars. And I continue to do so. It is not financial advice. I'm just sharing my digital perspectives of what I am doing for myself. Not selling a used car. But when I see this, I get excited, because the biggest holders in the XRP network are still accumulating, and they hold 6.12% of all XRP. That's exciting to me. And so is this. Eleanor Terrett from Fox Business News. Shout out to you, Eleanor, and Charles Gasparino. Patrick Doody, the independent expert SEC retained to analyze the perspective of a reasonable purchaser of XRP, is currently employed by a private consulting firm that won a $4.1 million government contract in 2018. How about that? The contract was funded by the SEC. And guess what? Consider that fact checked, because Jeremy Hogan comes in right here and shows us this is it. Definitive contract number is a time and materials federal contract award. It was awarded by Integra, which is the company that Patrick Doody is with there. FEC LEC in 18. Definitive contract is funded by Securities Exchange Commission. The value, $4.1+ million. Well, there you go, ladies and gentlemen. When they get a hold of that in court, it is expert gone right there. Your credibility is absolutely zilch, zero, nada, which leaves the question, does anyone know exactly how many expert the SEC has other than Mr. Doody testifying that XRP is a security? Really need to find out that answer. if we can. It'd be nice to know who the experts are for Ripple, by the way. But going into the next subject here, Terra Insider, calling themselves Fat Man, claimed on Thursday that top crypto exchanges, including Binance, Gemini, Kraken, and Coinbase, could face a lawsuit under the Securities Act for the sale of U.S. Terra and Luna in the U.S. Now, I don't want to be Mr. Curmudgeon here, but, it would not surprise me if this were to take place. It fascinates me that they won't list something like XRP, but they'll take a chance like this and now be at risk of an actual lawsuit from the SEC. Keep your eyes peeled. Gary Gensler's made it obvious that he wants to go after these exchanges and DeFi lending platforms, so watch out for that too. Brazil's Federal Reserve has declared the Brazilian investors in the crypto asset market must pay income tax on transactions that involve the like-kind exchange of cryptocurrencies. For example, Bitcoin for Ethereum. Well, it's not very sexy, but this is where it all comes down to. How does the man get his, right? You go have to pay the man, right? They're not going for that business. And here you see an expansion of the use of blockchain technology as Union Bank in Philippines launches the country's first digital bond offering. Now, I went into the article and it says it's going to be about $19 million worth in USD equivalent, which is about 1 billion in Philippine pesos. And they're going to start offering these things on a 1.5 year basis with a 3.5% per annum. So that's where it is. It does say blockchain. The platform uses the Philippine Depository Trust Clearing Corporation, does use the blockchain technology, but it does not specify in this article which blockchain technology. So if we find out more, we'll let you know. Right here, JP Morgan, Jamie Dimon. Oh, Jamie. Digital assets have replaced real estate as JP Morgan's preferred alternative asset class, the bank said in a report on Wednesday. Now, listen, that's exciting because we know that JP Morgan just a couple years ago was going to fire anybody that worked for him that he caught dabbling in cryptocurrency, buying, selling it, or what have you, right? Well, how things have changed. Well, then they go on to talk about, now they're talking about Bitcoin is undervalued, says fair price is 20%, 28% higher than it currently is today. Well, not only are they back into this and saying real estate's not even good as a game. Look, this is talking its book to me. I believe, and I could be wrong, and this is not financial advice, but from what I'm saying, I do believe that there is going to be a general correction or a collapse in the economy. How far it goes, I don't know. But I do believe it's going to involve real estate as well. I think we're even seeing little glimpses of it in certain markets now. However, I believe that this signaling from JP Morgan talking about the fact that crypto is more, attractive to them than real estate at the moment tells me that they think there's some more downward motion to come in real estate before they begin to accumulate. So that could be a bit of talking their book in that regard. We'll keep an eye on it. Right here, the World Bank is signaling even further its concerns over Central African Republic, CAR, adopting Bitcoin as a legal currency and says it won't support the newly announced Sango crypto hub. This is just another warning signal coming from either the IMF or the World Bank, which are attached at the hip there. They didn't like it in El Salvador. They don't like it wherever else it's mentioned. And they're really, really telling you, don't do this, because it's going to end badly. It is not going well in El Salvador. And I don't say that with any kind of, cheer or celebration. I say that and understand that the citizens there are getting murdered with that stuff. I mean, it's just like, think about it. I mean, if you're not making a huge wage, you put your money in Bitcoin, right now you're getting beat up. You're upside down. Transactions take too long. I mean, this is not a solution. I tell you, it is not a solution. Look right here. Hester Peirce says, talk about not having solutions. We're not allowing innovation to develop and experimentation to happen in a healthy way. And there are long-term consequences of that failure. I tell you, this is what a mess this is here in the United States. I tell you, ladies and gentlemen, how glad I will be when I don't have to report on the SEC sticking their thumb in the middle of this entire space. I tell you this. You know who is at fault here? Congress. They get paid to solve this problem, and they won't solve it. Now, it could have been solved last administration, and it wasn't solved. So this isn't me going after one side or the other. This is crossed two different administrations of two different parties. So I don't give a damn about which party's which. Neither one of them have done their job to secure the lead spot for the United States as the American innovator for the fourth industrial revolution. And that is a sad commentary. Circle asking the Federal Reserve not to step on its toes by launching a digital dollar. Now, this is where we get into we might be seeing how this shakes out a bit, right? Or at least a possibility of how things are going to shake out. Circle is asking the Fed to back off a bit here because they have the coin and the token they believe from the private sector, which they are from, that has the innovation, the technology, and they've been also holding themselves to a high regard of requirements and due diligence and reporting and all of the things to be completely compliant with the U.S. government and the Treasury on the reserves, the backing, accountability, all of that, right? So that's what's going on here. What we have to worry, or not worry about, but what we have to wonder about is this. We know that there's been a call for a great reset. We know that there's been a call for a new Bretton Woods, which all of that suggests a new financial system. Because the old Bretton Woods was the defining moment of how the U.S. dollar and where the U.S. dollar became the global reserve currency at that time back in 1944. And we also know it is also where the creation of the IMF came from, right? So the IMF calling for a great reset and the new Bretton Woods and the World Economic Forum calling for a great reset, is all pointing to a new financial system. Well, you can't have a new financial system unless you really have a new system. You know, it's like the old saying, in order to change your life, you really got to change your life, right? You can't just change one thing. Your whole life has to change, right? And that's really the truth here for the financial system. Can you have a great reset without a great crash? I'm not so sure. But in this clip right here, we're going to hear Equity Management Associates Lawrence Lepard tell you what he thinks needs to happen, because we're just playing whack-a-mole to do anything other than what we're currently doing here, and we need to change to a new system. Check it out.
The system is very far gone, and what they're trying to do now is put Band-Aids on gaping wounds, and it's just not going to work. So, and this isn't a red thing or a blue thing. This is a larger system problem that can only be solved, in my estimation, by returning to a sound money standard. I mean, we should reset the currency with a sound neutral reserve currency underneath the money supply that we now have. Otherwise, we're going to continue to have these problems, and it's just going to be whack-a-mole. It'll pop up one place and they'll hit that, and then it'll pop up another place and they'll hit that.
You can't say it any better. Shout out to Daniela Cambone and Stansberry Research for interviewing that gentleman there for Lawrence Lepard. And I tell you, I think he said it just about as good as you can say it. Need to reset the currency system with a sound neutral reserve currency that's underneath of it. Think of that for a moment. Underneath of it. That is a big statement. When I hear that, I think of what was said by the gentleman that was on Stansberry Research, David Morgan, who said that they could put the digital dollar, and there's been talk about putting the digital dollar on the back of something like XRP or some other token or protocol, right? So very, very interesting the way he says underneath the neutral reserve currency, underneath of the currency system that exists today. Otherwise, you're going to play whack-a-mole. Now, and I think that's dead on the money. And I tell you what, I think SWIFT gets it, because SWIFT plans to connect several central bank digital currency systems that aim at simplifying the issues with cross-border transactions. Now, listen, I want to play you a set of clips together, and I want you to stay with me as we do this, because they really, really hit home here. The first one is right here. Listen to this very quick clip, and then I'm going to go to the second one that brings in the Federal Reserve Board as well. Take a listen.
Where is the difficulty? The difficulty is that today, monetary policy in a country, or as it is the case in the Eurozone, within the Eurozone, is defined by the central bank, the Fed, the European Central Bank. And this monetary policy applies to the territory, the jurisdiction. How could central bank digital currency cross borders and go into another jurisdiction? Would that create a risk of currency substitution? So everybody says, I want ECB's CBDC. I want the euro. And these are unresolved issues, but it doesn't mean they cannot be resolved. This is why, from the fund, we are advocating to think about this world of digital money as a global public good. And in a recent discussion in Zurich, where we both were, what we advocated for is to have a public platform. So when protocols are agreed, this public platform can connect different CBDCs. There can be interoperability, the same way you would transfer euros from one country to another. You do it using CBDCs.
And there you have it. Now let me set up the next clip, because you need to hear the next clip with the Federal Reserve Board gentleman, Jim Kuna. Take a listen.
But I do think everything outside of B2B is open for use. And if it's well designed, if it's fast and very cheap, if it's a public good, cheap or free, it can be used for things that we don't have the current ability to do today, like micropayments. You can't do micropayments cost effectively.
He sounds like David Schwartz talking about micropayments. He sounds like Kristalina Georgieva, the IMF director, of saying a public good. The narrative is tightening. The narrative is becoming clear to the surface. These people that are saying this are not YouTubers and podcasters. Kristalina Georgieva doesn't have the ability or flexibility to carry a narrative like this and not get it done. She would look feckless to call for something and it not take place. You don't get to be the director and the leader of these things and have the luxury of just spouting off what you think should happen and then none of it take place. You lose credibility. Let's take a listen to something else here you need to hear, and it's James Wallace from Ripple.
I think the four areas of focus that Pierre mentioned are actually, those are the same objectives that, as an example, Ripple with RippleNet set out to achieve, right? So lower costs, faster, more transparency and greater access. And I think one of the big questions here is, what happens to the correspondent banking model? I think the role that the banking system plays is crucial in the global economy, and I think that will continue. But the sort of traditional model of, pre-funding accounts, for liquidity purposes, nostro-vostro accounts, it's proven that part of the correspondent banking model is not needed.
Now, it's already proven that part of the banking system is not needed to pre-fund accounts. Now, this speaks to what Kristalina Georgieva was just saying a minute ago about how she opened it. What's the problem here? How do we do this, right? Where there's central banks going in different, or digital currencies going in different jurisdictions. Well, you don't need to do that anymore. Right? James Wallace just told you. And who's sitting in this panel? This gentleman right here. And there's a lot of important people here, but this gentleman right here is Tommaso Mancini Grifoli, another division director from the IMF. Now let's hear what he says here, because I want you to get this part that he talks about solving the problem of friction in a new financial system.
Some form of, say, fast payment system. So we've solved the problem of interoperability domestically. Internationally, across borders, we don't have such infrastructure, and we don't have a common settlement asset, which is riskless and both are willing to hold. So what do? The private sector steps in, builds a bridge, or many bridges and asks for a toll to pass the bridge. And that's what correspondent banking is about. And essentially, payment.
And there you have it right there. You ask the private sector to build a bridge or bridges, and then they ask to take a toll. And isn't that what this comes down to? We've even heard Gary Gensler in the past talk about, a newcomer would have to give up some kind of market share in a great way or give a huge part of their token distribution to the banking system in order to be able to play a role in the new financial system, which is never, ever going to obfuscate the central bank system, period. It just isn't going to happen. So I asked the question again, ladies and gentlemen, when we're talking about moving into a new financial system, we're talking about SWIFT moving into a new financial system. It's happening. The question now is, can you have a great reset and an introduction, ushering in of a new financial system without a great crash? Make sure you hit the like and subscribe. Check out all the links below the video. I'll catch all of you on the next one.